Hello, everyone, and welcome back to TartleCast. It is May 17th, Tax Day, and serendipitously, we have one of the finest tax minds in the world on our podcast with us to discuss the inefficiencies of our current system and why it is lagging so far behind and why it needs to reform itself to where technology currently is today. Her name is Annette Nellen. She's currently located in California. Her background is enormous, so we'll be more than happy to put that in the show notes for everybody. But Annette, thank you so much for joining us.
Oh, my pleasure. Thanks
So,
for
Annette,
having me.
yeah, are you kidding me? How can we not have you on here?
Okay.
So, and like I was telling you before the show, I've never been so excited to talk about taxes. First of all, I don't like paying them. All right, that's just my personal thing.
Mhm.
One, because I know the system's naturally inefficient. So it's like, why do I want to pump money into something inefficient? And then over here, you write something in the Hill on this op-ed, and it's titled, "Let's Say Goodbye to the April 15th Due Date." So here's what's interesting. You're talking about these inefficiencies. You talk about the gains we've had in technology, and we have these, beautiful, very efficient flywheels going on, but the IRS still seems to be using this like Flintstones giant stone wheel that they're trying to push. And I'm trying to line up my dates with like planetary alignment and stuff like that. It only happens once every 3,000 years or something. Tell me about the genesis of this for you and why you felt it was so necessary to speak about this specific inefficiency and why the eradication of one solid date itself would be beneficial to us with our taxes.
Well, I guess I've been thinking about it for some time. It's like talking about it for probably at least 3 years now. I guess what really kind of hit me was for my job. I'm a professor at San Jose State University. My paycheck, like many people, is just automatically deposited to a bank account every time. So there's a digital file there. At the end of the year, I am mailed, or I guess I can go on and download a copy of my W-2, which I then have to, enter into the tax prep software. I'm like, this is
Right.
really crazy because the digital file should just, I describe it as, let's just have all these digital files feed into my tax cloud. I think that's part of the concern over the years. Oh, the IRS has all this data. Why don't they just prepare the return for you? Which for probably a little over half of individuals who primarily just have a W-2, maybe a 1099, that would work fine, right? On a W-4 form, when they take their job, they can indicate how many children they have, the age, or they could log into an IRS platform and get that information to know what their dependent credit and child credit amounts are. Some concerns over the years have been, we don't trust the IRS. But there was a report written by the GAO back in 1996 where they said, other countries, the government just prepares the return and tells you about it, or some places even the employer, or you just have withholding at the source of everything, and it's just all taken care of. But one of the things they said why it might not work in the US in 1996 was, well, not everybody trusts the IRS, which I don't see any reason not to trust the IRS. They're very competent people working there. There are not enough people working there, and they have data, and they aren't going to do anything awful with your data. They've got very strict rules, even about they can't disclose anybody's data, or they lose their job, and it's very strictly enforced. But
all they're going to do is send you a
gonna,
bill. They don't even call you on the phone.
Okay,
No,
right.
see, like you talked about the data. First of all, you understand the aspects of data. You have a certification for cryptocurrencies. You're essentially an expert in that, and it's very helpful for the tax sense, right? Things become decentralized. So it's like you have a centralized authority. If they start just doling out people's information, they're going to have more of a political and social uprising than they could even deal with. I mean, you're already asking people to pay money into something that they thought they've already paid money into. So now you're going to abuse their information. Wouldn't work well for the IRS. It's an unreasonable way to look at it. So in a world where systems are becoming trustless because of the technology, how does that adaptation then work for the IRS? If it's not from this 1997, 1996, essentially survey that had gone out because it's a function of trust they speak of and it wouldn't work in the US, well, that's not the case anymore. It's no longer so much of a social or political thing. There's technology that solves that issue. So why isn't that not being adopted?
It is puzzling because all that data could just go into, say, your personal cloud so that you do control it. Because you might say, oh, that data might be useful to some company that's going to help me with my financial planning or see if I'm
Yeah.
putting enough money into my, IRA or saving enough for retirement that I choose, and I'm going to have them help me, and I've got all this income data that's fed into this cloud. Because then you could also identify, well, here's the tax prep software that I want to pull the data out of my cloud, file my return, and just be done with it. But at that point, it could be done on a daily or weekly basis. Even if
Right.
you own a business, if you set up your bookkeeping correctly, like even QuickBooks, whatever software you're using, where it's saying, yes, just put my revenue in when I've collected it, because I'm a cash method taxpayer. Just that I send a bill, don't put that into revenue, because cash method, I only report revenue when I'm paid. And I can even set it up because even when I work for a third party, I was always depositing it right into my bank account, becoming far more common. And certainly after when the pandemic started, more so. There were some companies that would still, mail a check to the people they owed money to. I think that's less common today. They want into the bank account, meaning there's a digital file there. But you all know there's plenty of ways that technology could do this. That's some of this technology we're talking about is probably, in the 1980s and 90s. It's not all that amazing that, oh, we can have
Well,
a payment either the deposit into your account, right? But you would identify what's the tax prep software to gather all of that. And if you're paid weekly, you're paid monthly, you have other deposits or expenses going out that you've all programmed. Yes, for my business, I'm just putting in the ones that I know are deductible. It could capture all that even on a daily basis. You could have a app, that just like people have banking apps and even investing apps and all that, that
right.
would let you check on a daily basis. Oh, this is how much I've earned this year, and I owe this much tax. Because you can do it based on, well, the app knows I have a child that qualifies for the child tax credit. You could know on a daily basis, oh, gee, I haven't paid enough in. I'll just swipe and have my bank account transfer some amount in. And maybe the IRS and Congress would have a rule. Well, you have to at least come true at the end of the month or something, or end of a quarter. But again, you could program your tax prep software to do that. Some people have it programmed with some state
I think,
agencies, just automatically makes your estimated tax payments. You have it set up and it's done. So
yeah. And so that way you're not dealing with like a lot of people forget, people that run their own businesses, like, oh my God, I got this huge tax bill at the end of the year. It's what you speak about, we have created for the world essentially your own personal data clouds, which you can share and you can monetize or do whatever you'd like to do with. And so when you
mhm.
talk about this is albeit quite possible. The question is it probable that the government chooses to adopt a method like that? And what I'd
you
like
know,
to ask then, what data from your own stance of your professional background in the past has shown you this sort of path of inefficiency with their processes lagging behind, and how essentially does that force the tax systems itself and tax law to lag also? Which is the driver here for how we look at taxes and how they begin to evolve? Is it the technology and the data and the processes of the IRS, or is it how everyone else is looking at it? Because I know that when cryptocurrencies came out, that changed dramatically how they had to look at taxes. Because who's really in control? What's the real ownership? If it's decentralized and there's multiple nodes supporting it, does any one person truly hold that thing? And then you have to ask for self-reporting. So what data could you tell me actually is saying this is the leading cause that creates this change, and this lagging thing is actually having these sort of effects for everybody else?
Yeah, it's a good question. I think the lagging effects are a few things. Yeah, the IRS has very old technology. I don't know if it's annually or every other year, but the GAO does a report on which government agencies have the oldest technology. And IRS and the Department of Defense rate up there with some of the things being over 50 years old. I mean, they still run a lot of
Right.
things on a mainframe, where they need to get folks that even understand the old programming that's with these. Now they do a certainly more modern technology as well, but is it all working together? Also, I think there's too much of a thought process on everything has to be tied to a form. And I always keep on making the analogy. I have to do it with my with tax practitioners, because I've heard sometimes a tax practitioner says, "Oh, I'm using modern technology. I e-file and I have a scanner." I'm like, "Well, no, we can go beyond that. Technology does a lot more. Think about when you order from Amazon or some other company, you're not actually filling out an order form, right? Years ago, before we had e-commerce, if you were going to order like in a catalog, you fill out an order form and you mailed it in. You don't do that. So why are we so tied still to the form? Why not have it just take this data as it's being generated, gather it, and just you'll know what your tax situation is for income tax purposes at any point in time. So I think it's many stakeholders that all have to adapt to what's there. In that 1996 GAO report where they said, "Oh, a lot of the public doesn't trust the IRS." I'm not sure that was really true then, as to what they don't trust. I think a lot of it really ties to really, "Oh, I don't know anything about taxes. It's all very confusing." And many people actually do trust the IRS that they should
Right.
be doing these things for them. A lot of people would say, "Well, why aren't they just sending me a notice of what I owe or don't owe?" Um, but I think Gen Z, the people like currently in high school and college, they have grown up really tech dependent. So like they aren't expecting necessarily, "Oh, I have to go every day out to my physical mailbox and get mail." I mean, I think their view is, if it's important, it would have shown up on my phone somehow. They know that the technology
Correct.
can do more of this. They do everything online. Plus, I know and the college campus, when we're actually physically together, if you're waiting online at the Starbucks, the only people really pulling cash out of a wallet are the older people, the faculty and the employees.
I don't pull
Even
any
I've
cash.
seen the
I haven't
club
carried
having a
cash,
bake sale.
honestly, in months.
Yeah, so,
Yeah.
yeah, or even at a bake sale, the
No,
club will say, "Oh, here's our
I can
Venmo
legitimately
account."
tell you I haven't. Yeah. Yeah, no, yeah, I'd rather Venmo. I don't carry cash. And if
Okay,
I were to
so
throw a kegger right now on a college campus, I'd be like, "Well, yeah, okay, Venmo every time you walk in, right? Or here's my QR code for my cryptocurrency. That pays for the keg."
right,
That's how
right.
that would
So
work.
so there's far more digital transactions, which means there's data there, and I think we will get to the point where there just be less cash being used. Now, some might say, "Well, no, it's someone wants to be a bad actor. Yeah, cash still helps because it's
Yeah.
easier to hide, right?" Someone says, "Oh, yeah, I'm going to do some work at your house, but pay me in cash." Well, yeah, we never know if that really going to get reported. Hopefully, it is getting reported, but I think they're going to find more folks will say, I think like some of my students, "I don't have any cash," or I'm sorry, what's cash? What do you mean? I mean, I can transfer
No,
you
exactly.
money. So it's gonna. So I think
Well,
there's many
you're a
factors
cryptocurrency
moving
expert.
towards this. Yeah, but that just means there's more
Yeah, no, right.
digital
And you know,
transactions. Yeah, and
right, and the digital transactions have a better track record than the cash itself. And even for crypto, you get all these articles that come out in the mainstream that say, "Oh, terrorists are they're going to move into Bitcoin." All that. That's crap. You can trace back all the way back. There's a reason why it's a blockchain because you can see where it comes from in the ledger, right? But with
right,
cash, it could be going anywhere.
right, right, and the government, when they're concerned about these transactions, like IRS clearly concerned, they do contract with third parties that'll get in and really do some study into the blockchain. And of course, also the way like Bitcoin and some other currencies work. If I happen to have in my wallet, if I had 10 Bitcoin, I don't. It was all in one code. If I was going to use even
And that wouldn't be
half of a
talked about.
Bitcoin, it pulled the whole thing out of the wallet. So then it would be, it's not like it's just going to pull out half so no one knows I actually have 10 Bitcoin. It's going to pull that whole, if it's all in one code, it's going to pull it all out and then give me change, which then means it's on the blockchain and someone knows, hey, somebody there actually had 10 Bitcoin, right? So, I mean, it's not as
Yeah.
anonymous as some people might think. I know there's some other tools that some bad actors will use to try and, hide those transactions. And I think the reality is you're always going to have some bad actors on something, but I
Thank
think things certainly will change in that you're going to see more businesses not having this issue of, well, I get a lot of cash. I mean, I'm a restaurant, I get a lot of cash, credit cards, and I like to think that most people do properly report everything, but yes, some don't, and that's been known for decades. And it's mainly cash businesses where, uh, not everything is known, and either they're bad record keepers or they think maybe they're entitled to say, well, I don't have to report all of that. The cash I just want anybody to know about. But even there, a good auditor can go and figure out, well, you bought this many supplies, and what did you do with it? Did you end up throwing it out? Because it looks like you bought enough supplies for 100 meals, but you're telling me you only sold 60 meals. Something's wrong here. Or they watch your restaurant for
Right.
a week to see what's the typical flow, or there's data on for restaurants what percentage of customers pay by credit card versus cash, and you get some kind of estimate there. I mean, that's not new that the IRS, they're good, well-trained auditors, accountants. Same with FBI. If they want to figure something out, they've got forensic accountants that can go and do all of that. One other thing that I think also highlights, and we see this announcement. I noted it in the op-ed, because about every early April, IRS sends a news release out, which of course most people don't read a news release. It's on their website, and maybe some newspaper. And I get them emailed to me automatically, where it says, oh, the way it works, when you file your return, it's open for 3-year statute of limitation, where you might go in and amend it, or the government might come in and audit it. Well, if you don't file a
Right.
return, and some people don't, they don't know they look at the IRS website, oh, I don't make enough to file, but they forget that they had withholding, and the only way they're going to take the withholding back is to file the return. That expires after 3 years, and so the IRS will post an announcement, which I think the last one was, hey, we have over 1 million people that are owed $1.3 billion, that if you don't file by May 17th, your 2017 return, which was due April 2018, so 3 years takes it to 2021,
Yeah.
you're going to lose your refund. That's crazy given the technology today. They know who those people are because they had somebody withheld from them. It's typically a paycheck. It's some student who didn't know, oh, I have to file a return, because you go to the website, if you don't read the whole thing, because at the bottom, I think it does say somewhere, hey, even if you don't make enough to file a return, if you had withholding, you have to file to get it back. Why do people
Right.
lose that money when the IRS, on a better technology system, just would have said, oh, when you checked to confirm what your income tax liability was at the end of April, it turns out that you're way overpaid. Do you want to leave it there, or do you want to transfer it to your bank account? One swipe on the app moves it to your bank account, or whatever you want to do. But we know that technology exists for that, because we see it, some combination of banking and investing activity you do online, shopping. We know technology can do a lot of these things. And my reference to, well, it's your cloud, your data, you can identify all that you want to have in there. Maybe you go to, oh, I need to do some estate planning. I want to know, write down where my assets are going to go upon my death. Well, you find an attorney and you say, well, hey, everything's in my tax cloud. I've got all my assets tied in there very securely. I've identified what security is there. And yes, security is certainly a concern in many areas, not just in the tax field. But I think that's what I really wanted to emphasize. It's your tax cloud, because certainly there are people, oh, I don't want the IRS to control my cloud of information there. There's no need for them to do that. But I think, a lot of efficiencies by just recognizing there are so many digital files that are relevant to your tax. Why not just use them in a more efficient way, so far as you don't have to worry about, oh my gosh, April 15th. Now you would know on a regular basis through the app, which the IRS can give some guidelines. Hey, if you design your app this way, we will trust that it has all the data you really need to get you a right picture. You hire the third party that's going to help make all this happen, because we obviously have companies and Intuit and others. That's another concern whenever comes up about should the IRS just prepare your return. And they can't fully do that. If someone's self-employed, they don't have all the information about expenses. But for many individuals, over half apparently, it's primarily wage data. where the IRS does get the W-2 from the employer at the end of the year. They can figure out through asking you or a form how many kids you have and all of that to figure out your return, and they might just then send it to you. But the political wind on this for years has been, no, we're not going to do that. In fact, Congressman Camp, back when he was chairing the House Ways and Means Committee, like I know he was chairing it certainly around 2000 to 2004, 14, 2010, 2014. He had a proposal for tax reform. It was the Tax Reform Act of 2014, something. And the legislative language thought it was HR 1. He had a statement in there, and there will be no pre-populated returns, saying that the IRS would not do this, which is really just like, that's crazy. That's what the technology is. And I think Gen Z, they're so tech dependent and they know where all this data is. Their view is, why am I doing all this when the IRS has the information? I think that's more their view. So I think
Right.
it's kind of old fashioned that, oh, like nobody trusts the IRS. I always see any reason not to trust the IRS. I did work for the IRS as an auditor in the 1980s, and very, very competent people. Are their technologies as modern as they could be? No, I mean they have limited funding. They still have to keep the old system running on all of that. But there really are a lot of efficiencies with better use of technology. Because another one is, think of all the companies, banks, employers that have to mail their customer or their employee that tax form at the end of the year. That's a lot of postage that adds up there. Plus, just printing the paper. Now, in some areas, Congress has said, well, if you do this, you can actually tell, if they agree to it, the person you have to send it to can say, oh, you can send it to me electronically, right? But I don't think that's true for all of the forms. Well, you still have to send them off to the IRS. So if you're, I think, above like 200, 250 forms, you're going to have to electronically send that to the IRS. The IRS doesn't want to have all those pieces of paper. But with
Right.
all of that there, can we even get to the point of, let's not even have the paper? The IRS could form its own, cloud saying, hey, employer, when you told Annette that her paycheck just got into her account, which had that form that says how much withholding there was and all that, that goes into our cloud as well. You don't need to gather it at the end of the year and send off a separate form, as long as you have your technology set up. And that's where the law could be saying, hey, here's the guidelines. The software has to have, these security protocols. If it's doing all these things, then we're assured it's working correctly, and that's fine. An audit would be, they would just randomly audit folks to say, yes, are you actually doing this correctly? Or they go into the restaurant and find out, hey, restaurant, you said that everything you were doing was a digital transaction, but we're sitting here watching you, and there's people coming in paying cash. How do you get those into the system? So I think it's just a different thinking. I think Gen Z is going to, and the generations behind them, why isn't this happening? Why do we still have, I'm waiting to a form to be mailed to me, when can I just have a digital file? Why can't I know this throughout the year? Now, some people, okay, so many aspects. Actually, back to this information return. If the payors could say, hey, I got my system set up, every time I tell somebody, yeah, here's your paycheck, or here you earned, this much interest in the bank this month, or here's what your stock transactions were for the year, instead of reporting it at this one time at the end of the year, where if you get something wrong on it, you got penalties. If I know I've got my system set up within congressional IRS guidelines that they set, so I know it's working, I don't have to be mailing those forms at the end of the year. It's because the data is just already
Yeah.
there. Why am I gathering at the end of the year when
That's
everybody has access to it? They can do what they need to do with it. So,
if you think about it, you've seen the superhighways in China. I used this analogy the other day off air with somebody else. It's like a lot of our systems have all these individuals owning their own cars, and they're using the internet, and they can come in from all these different angles. But then at one moment, to get into the city, to get into this centralized machine that they need to be a part of, they force 15 lanes down to 2. Well, what do you think is going to happen when you have everybody and their mother rushing in for one specific date and they're carrying all this information? It's going to create a problem. But when you look at the data, data can roll. It's flexible. My mail is also going to be dependent on the mail personnel that has to bring it there. And then I have to have a piece of paper. And I know that I can copy data over and over and over and over again. And that piece of paper, that will deteriorate with time. But I can always spin up new servers without having to cut down trees. And when you think about the efficiency just in that and having these things continue to roll, I don't mind if you have some day where it has to end so we can finalize the liability. That is
Right,
obvious.
right.
But there's no reason you can't build up to that point ahead of time and already have everything collected rather than trying to collect all of those automobiles or people or paperwork all at once.
That's right. That's right. And even just at the paper, think of how many times we'll get something from a credit card or the bank. Do you want us to stop mailing you statements? They've been doing that for years, right? They don't want to mail you a bank
Yes.
statement every month. And yes, there are, I think it's now like less than 10% of individuals that actually don't use the internet, but that's going to continue to go down. But certainly the IRS can still find some way to help those individuals. So yeah,
Yeah,
your
because those are the
analogy is
natural
correct. We
laggers.
really
Those
have
are
to
those
be,
are we'll call them the formies.
yeah,
Those are the ones that like the forms. You know what I mean?
well, I think some,
I wanted to ask a question that
yeah.
so let's say a magic wand was waved and you were put in charge of the IRS. One of the things that we do at Tartle is we support not-for-profits for government and corporate transparency. And I know perception's reality, and I know most Americans, like you had said earlier, don't understand. What would be some of the things besides, I know you mentioned an app that would create transparency, tax cloud that would create transparency. What are some of the other things that you would do if you were in charge of the IRS for transparency?
Well, I'm glad you mentioned that because that's been another big push of mine. There's principles of good tax policy, which is something I've been focused on for over 20 years and trying to help, like in my blog, can we have a tax system that best meets these principles of good tax policy and reflects the way we live and do business today? It's like this live and do business today is, yeah, we should have far greater use of technology and not be so form driven or paper driven. But transparency, which is a principle of good tax, but transparency and accountability, that people should understand how taxes work and the effect on them, where most people don't really understand it. And the reason why, like in your K-12 education, you probably never heard anything about taxes. I think people's first exposure to
Mhm.
taxes is that first paycheck where they're thinking, oh, I make $10 an hour. I work 10 hours. I'm getting $100. Only to find that paycheck is like,
Mine was
oh my
the
gosh, that's a poor way to learn about the tax system. Yet think about civics class. I think in California, I think it's at least eighth grade and 11th or 12th grade, you have to have civics class. You're going to learn about the three branches of government and how a bill becomes a law. They will never mention anything about how it's funded, as well as no discussion of your role and responsibility as a taxpayer. I mean, you can ask a group of college students, and maybe some of them aren't working, how many of you pay taxes? Well, the people who aren't working, they don't raise their hand. I'm like, of course you pay taxes. There's a textbook sitting right in front of you. You paid sales tax when you bought that. You put gas in your car. You pay taxes directly and indirectly. But it's really unfortunate that people don't understand that. And I think the IRS can help play a role in that. In fact, actually, they have a website that they've had for some time geared to teachers and students in like high school or junior high. It hasn't been updated since 2014. So at one point, they had some funding for it. Um, it but it would be one way to get that information out. Plus, like in math classes, I've actually done a couple reports recently where I had the opportunity to present this to the tax agency in California, the Franchise Tax Board, as well as just recently, I did have some presentations on this idea to some IRS staff and some congressional staff as well about how can we help people better understand the tax system? Yeah, if the IRS could get the funding to update that web page, because it's really done very well. It pushes out lesson plans, but 2014 law is not what we should be learning today. And also, it's sending a message of maybe it's not that important. But people really need to have a better understanding of taxes. It's too much of a mystery. And people should know where they're paying taxes. That transparency and accountability to taxpayers, they should also understand, why are we making certain changes? Another part of transparency I would push, and I'm not sure what government agency would do it, would be, why can't we see on your tax return, your tax filing, where you're getting all these tax breaks? It just has, you show some of your deductions, but there are things called exclusions, where something that's really income doesn't even show up on your tax return. The largest one in our tax system is the exclusion for employer provided health insurance. It would not be unusual for a full-time person working for a company that's providing, even paying part of your health insurance, that benefit might be, 5 to maybe close to 20,000 a year, maybe even more. That is tax-free income to the employee, deductible by the employer. Yet we don't know about it all. No one knows, oh, gee, if I had, $10,000 of this income, that instead of getting the cash income, wages, my employer said, oh, we're paying towards your health insurance. You're paying part of it. We're paying part of it. That's not taxable to you. Well, if you're in a 20% tax bracket, you've saved $2,000, but you're not seeing that. Instead, you're seeing the things like, oh, somebody claimed that, or an income tax credit. I can see the line on their return for that, or the child credit, or their mortgage deduction. If we could see, and again, your tax prep software, if the government said, hey, you need to see this information, the tax prep software would be adjusted so that it would show you this. I was even proposing, still I'm proposing, as long as we're thinking about forms, and I use forms in the context of, yeah, that's how we think today, but it would all be built into your software, of listing, how much did you get from your employer for that health insurance? What fringe benefits did your employer give you that weren't taxable? What is your tax savings from having donated money to charity or taking a mortgage interest deduction? Because I think if people saw that, they'd better understand their situation. I mean, you can see people, I hate to say this, but there are people who say, oh, low-income people getting these tax breaks. Often they are much lower than the tax breaks that high-income people are getting. Like if somebody has the maximum deductible mortgage, today it's $750,000. You have to have a lot of income to qualify for a $750,000 mortgage. Okay, and you might think, well, who even needs where you're located in the country? You're thinking, who needs that? But I know you said you're from the Bay Area. Yeah,
Yeah.
but you have to still have a high income to qualify for that. If they actually have that, so they're high income, they're probably saving $11,000 in taxes. That's more than what the highest earned income credit could be. Yet we don't know that, right? We're not saying, hey, look at that tax break you're taking. We're subsidizing your mortgage to $11,000. And there's data out there that's been done by academics and others to say the benefit that anybody gets from the mortgage interest deduction is really they can buy a more expensive home. And it doesn't change. The home ownership rates in the U.S. are the same as in Canada and the U.K., where they don't have those tax breaks. But if you really looked at all those, or gee, capital gains are taxed at a much lower rate than regular income. Very high income, most of their income is capital gain income. So instead of getting taxed at 37%, it's getting taxed at 23.8%. Well, that savings is far more than you're getting. If a wealthy person, and I hate to always use this example, Jeff Bezos. In fact, we've even seen in the news lately of how Bill Gates has the stock that he had from when the company first went public, right? Well, there's a lot of gain in that. If these wealthy people were to die today, that millions, if not billions of dollars of capital gain would never be subject to income tax. And no one seems to be, well, some people, but a lot of people aren't bothered by that. But if we can afford that tax break, then you think, okay, if you're fine with that tax break, why not give a tax break to teachers? Why not tell teachers, I'm not talking about college professors, K-12 teachers, tell them, hey, guess what? Your income, your salary, it's tax exempt. I mean, what's the difference? I mean, it would probably add up to maybe the same level of tax bearing, but because we lack transparency, not enough people are seeing that what savings you get from these tax breaks. They're called tax expenditures, the Joint Committee on Tax, the Office of Management and Budget, Congressional Budget Office, and then within all the states, they have agencies that gather all of this that say, not all of the spending is in our direct budget. Today, at the federal level, the bulk of the spending compared to discretionary spending is actually in the tax law. Because, like that mortgage interest deduction, that's the equivalent of, oh, you have a mortgage? Guess what? Every month we're going to send you, $1,000 to help pay for your mortgage. There is no difference between that and taking a tax break. So far as what's in
So
the
then
homeowner's pocket and the government's pocket, it's the
this
same
begs
whether
a
you write you a
question for
check
me,
or you
Annette.
take the savings through your tax return. That's why it's called tax expenditures. There's over 100
Correct.
of those in the federal system.
So
So
this
transparency
is
would be, can
that's
we
pretty
better
sharp, and
understand all
there's a
that?
couple things that right, and the transparency would help. And so then this begs a question for me. If we talk about people understanding how their taxes are going into this system, and I don't even know if it's an open or closed system. If it was a closed system, I would hope it'd have a very minimal net loss to increase efficiency. Is there any data that actually supports when the money goes in, is it actually benefiting what it's supposed to benefit? Where does the money go after it's gone to the IRS? I don't think people really are worried about the trust factor. I think it's as I've paid money into something and I have no idea how that money will be used. Because they're still walking around seeing a pothole. They still see their sidewalks are all jacked up. Things aren't getting clean, things of that nature. Where does their tax money actually go? What data can prove that sort of trail?
And that's another good part about transparency of understanding, okay, I paid these federal taxes. They obviously go into the federal government. And
Mhm.
I know at the end of the Obama administration, they had this taxpayer receipt where you can go online and say, here's my income taxes. Then it just, very simple program, just broke it out into the broad categories of spending. Oh, this much went to defense, this much went to, Department of Energy and all that. Um, that helps a little bit because it reminds people about these categories of spending. But you'd also want to know, well, I also paid some state taxes. I paid local taxes, like, property tax mostly goes local. I got in California, for example, when you pay sales tax, part of it does come back to the local government. But in many ways, it can get very complicated. So far as the state local factor in California, it get very complicated as to, how much is coming and where is it going. And then sometimes there's odd things, which I'll mention one, but it just makes you wonder, where all does this happen? In California, we've had for some time where a, a local government can say, really try and entice some big company to put their sales office, which might just be a few people, it's like e-commerce, put it in our jurisdiction because that's going to cause this use tax to all come here. And they get this big chunk of money, even though it might be for sales, various parts of the state. If people really knew that, I think, well, that's weird. Also, we have in California where for enticing that company to do that, the local government can say, oh, we're going to give you back part of that sales tax. Who would ever think when you paid sales tax that part of it was staying with the company? It doesn't happen often, but there are those
Mm.
examples of it. But it does make you wonder, does that happen in other states? Because when you pay your tax, you think, oh, it's going to pay, for the government services. Now, can everybody understand what all those government services are? Probably not. I mean, you might see people even
No,
thinking,
because
federal
they're not
government, there's a
transparent about it.
pothole in my street. Well, the federal government's not going to isn't responsible for the pothole in your street. Maybe the one on the highway, but not on the one on your street. I think we have to,
Yeah.
but just better understanding of this. I think asking elected officials, can you explain to me or show me where my property tax dollars are going? Because there is data, you get to the government
Probably
agencies, they
not.
can obviously figure that
They
out. Yeah, no, so that doesn't
tell you right
help.
now.
Right. I think if we just
Yeah.
had better understanding of even some of the basics, um, and again, transparency, accountability to taxpayers, you would, well, one, we'd better see some of the proposals being talked about today. I mean, you see folks like, oh my gosh, no, don't increase the estate tax. Well, the estate tax is owed by less than half of 1% of individuals. Why are so many people concerned about it, or probably don't even really know what it is? Do people understand how
I
much
think
they
it's
pay?
just
If you
the
ask
idea, the
people,
fact
yeah,
that the
Okay.
tax increases. They don't really care what it's about or who it affects. It's just the fact that the government's coming in to increase their tax.
Yeah,
And
which
so
for
whatever
most
sort of,
people,
you know,
yeah, that's actually not what they're proposing for most
it's just it
people.
by if I'm yeah.
Yeah,
If they're polarized, it's obviously going to upset them, right?
yeah,
But again, there's a lack of information and clarity about it. And, we're asking the government for a little bit of help in, getting our filings done more efficiently so that it helps them force their efficiency. Well, that, in my mind, increases the efficiency of them collecting cash from people. What they still haven't done is show people exactly how that money is spent. And I know because I've looked at it, tax dollars don't even go to those things like potholes. They go towards debt, right? States have to pay off debt. They have so many notes that they've specifically taken out along with the federal government. So it's never actually directly paying something. The tax dollars go towards paying off debt that's been built up for a very long time. And then the real nice cash flows go to the Department of Defense. It's funny to understand that money being energy, the Department of Energy requires so much more cash. Like the basis of everything is energy. So if they're working with nuclear stuff, I don't understand why they need more money. But that's
yeah.
just, in my sense, it's illogical.
Yeah, well, so at the federal level, there's far more debt, far less at the state government level because the states
Yeah.
are supposed to be operating on balanced budgets. Not that they don't have long-term
Supposed to
debt, but
be.
yeah, it is hard to track. Also your comment about the potholes. Some money for roads, and usually federal, but maybe some state as well, comes from the gasoline excise tax. You might think, well, why is there a special tax on gasoline, which certainly a federal tax of 18.4 cents per gallon, which has been 18.4 cents per gallon since 1993.
Yeah.
And it's tied to per gallon. So if you're driving, an electric car, you're not even funding the roads. But that highway trust fund is supposed to be for helping to fund at least the federal roads for maintenance and for development. It has not generated enough money to do that. It started back, I think, around 2008. They had to start moving money from the general fund over there. Why not fix it? We're not being honest with the taxpayers, or even explaining all of that. Maybe the taxpayers would say, "Yeah, that's fine. Let's even get rid of it. Let's just have the general fund everything." But they need to do something because we continue to buy more fuel efficient cars, which means it collects less money. If that's what we're going to use for funding the roads, obviously we'll have a growing infrastructure problem. And right now the discussion about, oh, we need money to fund infrastructure projects, that's something else that if you kind of have to dig in to find these reports, even what the basic things are they want to
Yeah.
fund. The civil engineers would say, "Oh, you need a lot more than that." I mean, we get a D plus on some of the, you got crumbling bridges and roads, but where's the discussion about how we want to fund the maintenance of that so we don't have these crumbling things? We maintain them, throughout, but how will we want to get the revenue for that? And why is the gasoline excise tax, 18.4 cents, and we don't seem to even focus on that people buying electric cars don't pay into any of that unless there's a change in the law. Back when there was tax reform, there's always tax reform discussions going on, even right after a major bill. Oh, we're going to have more tax reform discussions. There was an infrastructure subcommittee among the tax reform discussions going on in the Senate Finance Committee, and their report suggested, well, we probably need to move to a vehicle miles traveled, where you just say how many miles you drove, and you'd have a tax based on that. And we know technology could capture that very easily. Like in the Bay Area, people have the little gadget in their window, so when they go through the toll, they don't have to stop. Well, yeah, there's a lot of things tracking you. Plus, of
Right.
course, if you're carrying your cell phone, somebody knows where you are and how many miles you've traveled. That can all be handled. But they said in the report, oh, it'll probably take us 10 years to implement that. Did they start it? No. It was just a discussion. We just talk about things. We don't necessarily follow through. Well, that
All,
report was probably
it's all
6 years ago.
non-starters in that.
Yeah. Well, in
I know.
California,
Well, listen, I got to
Oregon,
tell you, I got to tell you, I can't wait for the day when someone shows me where the money actually goes to because they ask us to be transparent as individuals, but we find a real lack of transparency in other chains of flow that move through the government. And I got to tell you, for my K-12 education, the first thing that kicked me off on taxes was the Boston Tea Party. So in some
okay.
senses, I know what they feel like to throwing tea in the river.
That's
I
right.
do
The only
jive with that
lesson
a
on
little bit, and I'm
taxes.
sure
That's
quite a
right.
few other people do.
That's right. That's the
That was
only
my
thing.
first lesson on taxes was rebel,
That was your first and last.
you
That's right. I
know?
forgot
So,
about the Boston Tea Party where they were challenging the tax on the tea and the stamps and all that. That's right. That's our only
yeah,
K-12 introduction to taxes. That's not a good one.
yeah, that was my thing, and I still think of the times I would stand in Boston Harbor and reminisce, but, we can all look back to the good old days. So I gotta tell you, Annette, this has been fantastic, and I would love if you could share with people how they would find your blog, which has been around for, I think, 14 years now?
Yes, I just hit the 14-year anniversary on that. 21st
Congratulations,
century.
and
Thank
what's the
you.
name of the blog?
21st century taxation. You might think, oh, isn't this the year 2021? Is that term outdated? I'm looking forward to the day when that was going to be outdated. I don't need to blog anymore because I'm really focused on how can we make sure that our tax system meets principles of good tax policy and reflects how we live and do business today, which would, in our conversation here, be make use of technology here so far as the administration of taxes. That's actually another thing that when we talk about tax reform, it's usually we're changing the rules on how much is taxable. They should also look at how do we reform the administration of those taxes to make sure they operate in a sensible way today, such as using modern technology to its fullest. But 21st century taxation,
Well,
they should be able to
everybody,
find me.
you heard it from the expert, Annette Nellen, professor, San Jose State University, editor, author, tax chair, Irvine Fellow, and cryptocurrency expert. Annette, thank you so much for coming on the show, and we're very excited to read more of what comes out in those op-eds from the Hill.
Oh, my pleasure. Thank you very much, Alexander. Thank you.